Do you know what your retirement numbers are in 2025? Well, if not, we're here to update you on all of the major changes in our financial freedom video, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. We want to welcome you back to our channel. Well, Carson, today you're providing us with your annual update on what numbers are changing as it relates to common tools that people use for their retirement.
Yeah, Andrew, as you know, we do this type of video every single year as it relates to retirement plans because every year there are changes that are made to these plans, and we want you to stay informed. And of course, we want to make sure that our clients stay informed on these changes so they can take advantage of them. And of course, today will not be any different. We're going to update you on the major changes in 2025 as it relates to your retirement savings. But before we get into that, there are always just two rules to retirement income that we like to give you. And Andrew, what are those two rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and jump into our lesson today and update you on the major number changes for 2025 as it relates to your retirement savings.
Well, Carson, the main numbers that you're going to update us on today will be the changes that will take place with IRAs and employer-sponsored plans.
Yeah, we try to cover these particular topics, Andrew, every year to make sure that clients and, of course, those who are watching our videos remain updated so they can really take advantage of some of these changes. So let's go ahead and transition to our teaching slides and update you about all of the major number changes that you're going to want to know about for 2025. So now let's go ahead and talk about IRA contributions for 2025. So the IRA contribution limits for 2025 are unfortunately the same as they were for 2024. The amount of dollars that you can put into an IRA or Roth IRA is going to be $7,000 if you're under the age of 50. That was in 2024 and 2025. And it's going to be $8,000 if you're age 50 and older, in which you can get the $1,000 catch up on those contributions. It is left unchanged for 2025. That seems a bit disturbing to me because it seems like they were on a trajectory of always increasing those contribution limits, especially in the sense that they are concerned that we're not saving enough. So I'm hoping that in 2026, they do have an increase on those contribution limits into your IRAs and Roth IRAs. Now, there is an important factor that I do want to point out when it comes to your Roth IRA contributions, when it comes to 2024 versus 2025. When it comes to a Roth IRA, you do have income limits, which will prohibit you from actually contributing to a Roth IRA, at least contributing to it fully. Now, let's just go ahead and look at a single person in 2024. If this single person had a modified adjusted gross income in 2024 of less than $146,000 and they're under the age of 50, they could put in $7,000 into that Roth IRA. And obviously, if they're over 50, $8,000, as we mentioned before. But in 2024, if you made over $161,000, you were not eligible to contribute to a Roth IRA at all. Now, if you look over here at the chart at 2025, you can clearly see that in 2025, if you made less than $150,000 as opposed to $146,000, you are able to contribute to that Roth IRA, and you would have to make over $165,000 before you become ineligible to contribute to the Roth IRA. Now, you can see the same effect is for a married filing joint couple as well. That number in 2024 was $230,000 for a married filing joint couple before the individuals could contribute to a Roth in that household. But in 2025, it's $236,000. And if you made over $240,000 in 2024, you could not contribute as a married couple. But now that number has increased to over $246,000 before you become ineligible to contribute to a Roth IRA as a married couple. So keep those numbers in mind. Now I want to quickly transition over to the traditional IRA and talk about the differences of what you should expect from 2024 to 2025. Now, with a traditional IRA, the benefit of contributing to that is that when you put money in, first of all, there is no income limit as far as you contributing to a traditional IRA. You can make as much money as you like and contribute. But you also have the ability to deduct that money from your taxes as well if you fall under certain stipulations. So for 2024, if you are covered by a work plan, like a 401k, TSP account, a 403b, if you are a single individual, if you made greater than $87,000, you can contribute to that IRA, but you could not deduct any of it on your taxes. And if you're married and you made more than $143,000 in 2024, the case is the same for a married couple. Now, in 2025, if you are a single person, you can now make no more than $89,000 before none of those contributions to the traditional IRA can be deducted. And for a married couple, you can now make no more than $146,000 before none of your IRA contributions can be deducted from your taxes. So that is a benefit for 2025 versus 2024. Now, there's one more thing that I do want to point out about a traditional IRA if you're not covered by a work plan, meaning that you're not covered under any work plan. If you're a single person or you're married filing jointly and you're not covered by a work plan, you can make as much money as you like, and you can still deduct the full amount of that contributions from your traditional IRA. So if you're not covered by a work plan, those things are exactly the same. You can put the full amount into your traditional IRA. You can make $300,000 a year, and you can deduct that contribution from your taxes if you're not covered by a work plan. Now, let's talk about in 2025 how the IRS is planning to help you when it comes to your retirement plans with your employer. So if you have a 401k, a 403b, a 457b, or a TSP account in 2024, the maximum amount of dollars if you're under the age of 50 was $23,000. And in 2025, they've gone up just a little bit to $23,500 that you can max out your retirement plan. Now, you can see that if you're 50 and older, you do have a catch-up clause in these particular retirement plans, which in 2024 was $7,500 that you can add to this amount. So the catch-up clause in 2025 is exactly the same as the catch-up clause was in 2024 for a person that's 50 and older. Now, there is a side note here that I want to make note of for you, that according to the Secure Act 2.0, starting in January of 2025 as well, individuals between the age of 60 to 63 will have the ability to boost their catch-up clause. So you have to be between the ages of 60 to 63 to do this, according to the Secure Act 2.0. But the catch-up for those individuals starting in 2025 will be $11,250 as opposed to the $7,500. But keep in mind, as I mentioned, if you are not between the ages of 60 and 63, but between the ages of 50 and 59, your catch-up is still going to be $7,500 in 2025.
All right, Carson, so what's the moral of this video?
Well, the moral of this video, Andrea, is that people should subscribe to our channel so they can make sure that they stay informed and educated on all of the important changes that could affect their retirement goals. And we would also like to hear from you in the comment section below. Let us know how any of these important changes in 2025 will affect your retirement and if you're going to be taking advantage of any of them.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, We highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.